Welcome to Lecture 9. In this brief video, I've covered all the key points from the lecture, so I encourage you to watch it through. Please leave a like, share your thoughts or feedback in the comments, and share it with others. Your support is what keeps me motivated, especially as these videos aren't getting much reach. I'm also working on PDF notes, so if you're interested, check out the description below. In this video, we'll be analyzing the price action from August 15th. I've divided the screen into two sections for better clarity. On the left, you can see the entire price action from 6 a.m. to 9:30 a.m. I have marked 9:30 by a horizontal line. We witnessed a significant gap up at the 9:30 open, around 150 points. The thick blue lines represent the gap's low and high. This is why ICT advises looking for confirmation to short. Buying at the range high is risky, and price can easily target buyers' stop losses. We're starting right at the true open, and ICT has marked the 9:30 a.m. open as the opening range. Our focus is on whether the price can push above this high, where we have buy-side liquidity. There's also a small gap that the price might trade into, so let's see if it targets the buy-side liquidity. As expected, the price moved up and attacked the buy side. We have relative equal lows nearby, and the price has moved away from this small gap. Additionally, there's a fair value gap within a breaker block, which is formed by a low, high, and lower low. So far, we've seen an energetic run since 8:30 a.m., and the market has been bullish for the past week and a half. The price traded down to this fair value gap and, within a minute, took the buy-side liquidity. At this point, we're at the top of the range, and we don't want to be buyers here. Traders who have been long since the morning will likely have their stop losses triggered soon. The most logical place to trail stop losses, based on retail logic, is this low where the sell-side liquidity is resting. The price can quickly return to these levels, possibly within one candle. Those who bought the breakout are already underwater. Zooming out, we see the energetic run at 8:30 a.m., and the new day opening gap is within this breaker block. Price moved rapidly to the upside after tapping into the new day opening gap at 8:30 a.m. There's a breakaway gap followed by a brief consolidation, then a move above to create the buy side. ICT's focus at this point is for the price to return to the fair value gap, act as an inversion, and attack the sell side liquidity, ultimately reaching the gap formed after the consolidation. We're only looking for selling opportunities because the price is at the top of the range, and ICT doesn't want to buy in premium conditions. If you switch your charts from electronic trading hours to regular trading hours, you'll notice a significant gap up around 150 points, making new highs. ICT doesn't want to buy under these conditions. When you see back and forth swings on both sides like this, it's a sign of a bad trading environment designed to lure traders in before shaking them out. So far, we've seen no good setups. All the shaded areas are viewed by ICT as traps. At this point, ICT switched to the weekly chart, and we're trading within this large wick, which signals a potential reversal since wicks can act like gaps. Contrary to expectations, the price continued moving upwards with only minor retracements. ICT wanted the top gap to act as an exhaustion gap, leaving at least half of the gap below open. But as the price meanders around this level, it eventually moves above without touching the remaining gap, creating a wick. ICT's plan was to see the price move below the 50% level of the consequent encroachment close, and then look for short entries targeting the opening range high. However, this didn't happen. Instead, the price touched the upper portion of the gap, and ICT lost interest in the setup. If he has time, he might revisit the charts in the afternoon. I hope you found this breakdown helpful. If you did, please give the video a thumbs up, share your thoughts or questions in the comments. I'm also working on more detailed notes. Check the description below for the PDF. Your support means a lot and keeps me going. Thanks for watching.